Good afternoon, everybody. Coming to you live from my secret attic fortress deep in the heart of the buckle of the Bible Belt, North Carolina. It's a pleasure for you to see me today. Thank you for coming. Lilburn, good to see you. Welcome. If you wouldn't mind, just confirm you can hear my voice and see a screen that says TachEon Warp, the power of predictive trading technology. Once we know you can see that big blue screen, life is good. Sweet! 5x5. Excellent. Well, just a quick hello here from the webcam. Introduce myself to say hello. Promise I won't subject you too long to this, the baldness that is the crown of the king. I just want to say hi. How you doing? It's a crazy world out there right now. Where we live in North Carolina, domestic terrorists are shooting the transformers of electrical substations. There were half a dozen attacks in Florida. There were 2 attacks here in North Carolina. They tried to decommission one down in South Carolina today. We're learning more and more about people doing the same thing out in Washington and Oregon. And I believe it's just getting started. My time cycle studies seem to all be pointing towards 2024, 2025 as a big thing. And that pressure is building and building and building. So in true Mr. Rogers fashion, just want you to know, hey man, you're doing great. I appreciate you. And thank you for coming here today. We'll all take a collective deep breath. Just be okay for the next hour or so. I hope I can teach you a few things, show you what I've learned doing nothing but staring at markets and time signals now for almost 15 years. And I've learned a few things that may be able to help you grind out a living in the markets and not be one of the 95% of people who just contributes to the hedge funds and the prop firms and the investment banks. That's my goal anyway. So let's get to it. Bharat says I can wear a wig. Thank you, Bharat. I appreciate it. My buddy Dave says don't scare everyone. I think everyone's scared anyway. I think they're scared all on their own. They don't need any help from me. So in a nutshell, we're the only company that is working with time signals predictively. We are aligned with great men like William Delbert Gann, who believed the fundamental driving operating system underneath every market was time. Time was the fundamental consideration for Gann. And for our customers who've rated us 4.9 out of 5, thank you very much for that, by the way. It's been fundamental for them too. The element of time is exclusive, apart from, supersedes, rides above price action, volume, order flow analysis, support and resistance, candle patterns, and your zero lag whatchamajigger. It rules supreme. It is Highlander. It has cut the heads off every other consideration and reigns eternal. And I'll show you some things here that will allow us to build up into the software and how it works, how it's working. I wanted to show you guys something real quick. I may have to rebuild it from scratch if I can't find it here real quick. Give me just one second. And if it's not here, we'll take a look. Yep, it's not here. So we'll hit close and go back to the other workspace. Before we delve into the software, I want to talk to you a little bit about the predictability of things in general. I believe that life, our participation in it as people, countries, nations, a world, we're constantly reliving the same lessons over and over and over again. Those of you that come from backgrounds of faith will recognize quotes from men like King Solomon of the Old Testament. Look, they say, here is something new. But no, it has all happened before, long before we were born. No one remembers what has happened in the past, and no one in days to come will remember what happens between now and then. And so we see these themes over and over again. What has been will be again. What has been done will be done again. There is nothing new under the sun. History merely repeats itself. It has all been done before. Nothing under the sun is truly new. How many of you believe that? Right? How many of you believe that history is a song that rhymes over and over and over again? So, yeah, there's a few of you. And we're seeing, I think, we're seeing examples of that in society right now. Let me just set this up here for you. I think you're going to find this interesting. I hope you will anyway. Days advance warning, just one on the 2 and the 4. There we go. Okay. So can you guys see this chart okay? We'll set this up for the 200 period just so it shows up a little better. Sweet. Okay. Lilburn says, I got 2 bad marriages to prove everything you're saying. Come on now. Come on, Lilburn. You'll be all right. Okay. I want to take a quick survey. What percentage of you think, or what do you think generally happens around a red dot on this chart? I'll tell you what the signal is and where it comes from, but just for a minute. What generally happens, I need 10 people to answer, what generally happens near the red dot on this chart in the S&P index? Okay, we got 1 person, I need 9 more. Come on. We're gonna move fast today. We're gonna do some finger aerobics on our screen. 1, 2, 3, 4, 5, 8, 9, 10. It tends to go down, okay, in an obvious way. Red signal equals market tends to go down. 10 out of 10 of you said so. Okay, now here's the cool part, or the opposite side of that. What tends to happen near the green dots? It's not a trick question. You just sort of want us all to collectively agree one way or the other. What tends to happen? 6, 7, 8, 9, 10. Okay, 10 of you said green signals equals tends to go up. Okay, now here's where things get weird. What if I told you we knew when this signal was coming? What if I say we knew it was coming 1 day in advance? That would be impressive, right? What if I told you we knew when this signal was coming 100 days in advance? Think about that. What if we knew this green signal was coming 100 days in advance? This one was coming 100 days in advance. And this one was coming 100 days in advance. What if I told you that this was open source knowledge that you could all key into and take advantage of? Well, come with me to the Google. Because every signal on this chart is based on the phase of the moon. So if I type December 8th, 2035, I can click and see what the phase of the moon will be on that day. And they're trying to sell me bracelets and stuff. But you can literally enter any day in the future and know when the full moon and the new moon is going to be. So I really want you to let this sink into your noggins for a second, because Gann discovered this kind of stuff over 150 years ago, and it's never spoken about. It's never talked about on television or in the forums for trading. You'll never really see it in a Discord. And it's important because when we key in on it, we have a heads up on what price is likely to do in the future. How many of you, your heads kind of hurt a little bit? And you're going, wait, what? And you can validate and verify everything I'm telling you. Now, full disclosure, I have the software set to plot these days 1 day in advance. So if the signal's on December 25th, it'll plot on December 24th. I've shifted the signal 1 day into the future. Right? So you can go back and you can actually draw this stuff yourself on your chart. You can track it yourself. But here's the thing. And Raja, this is part of force. There's a repeating cycle with a known periodicity. The spacing between the signals is always the same. It's about a little over 14 days, right? And so I know that the next phase 4 is in 14 days, 0 hours, December 22nd at 5 p.m. I know when the next red dot is coming. It's over here. We can even draw it on the screen if it makes us feel better. So Raja, the next selling signal is over here somewhere. And based on what you told me, 20 of you so far, just looking at the screen anecdotally, your belief is that the markets will rise, are likely to rise, between December 7th and December 22nd, meaning we should be higher by then. How many of you are okay so far? Everybody's still okay? Anybody's head hurt? Somebody who doesn't believe it? Want to say something right now? Okay. Now, why am I showing you all this? Because we're going to go down to the intraday level and look at this through the lens of the software we've developed. But I want you to see without any kind of smoke or mirrors or guru knowledge. I'm sharing this with you so that you can see what Gann saw, that there's this underlying predictive foundation to any market. We can go down the rabbit hole if you want to PM me or email me after the webinar and talk about why this happens. I think I know why it happens. I've done enough research now. And we can have that conversation. But there's some things that we can discern from this. For example, Lilburn, if I come here and I say, look, from the bottom of every full moon to the top of the next new moon, what was the distance it moved? Ready? So if I come here and I just draw triangles and I measure how far it went by the next signal. You understand what I mean by that, Craig? If I look at the bottom of every full moon signal and I measure how far it went by every new moon. Jim, you see what I did there? What I can then do is I can come over and I can take every one of these triangles and I can lay them on top of each other. And I can actually build my own little statistical analysis of where this thing is likely to go. And inevitably, over the 15 years I've done this, something really cool happens. When you do an exertion analysis of predictive signals, you will get a minimum, an average, and a maximum predictively. And these two are generally outliers, right? But in the average, there's usually a cluster. If I draw it with rectangles, there's a couple big moves, there's a couple little moves, and then there's a whole bunch of moves right around the average. And Lilburn, can you see on our triangles where that's kicking in here too? So over here, check it out. Our minimum, we have 3 triangles or so right there. Our maximum is up here. And then look, we've got 1, 2, 3, 4, 5 right there. So think for a second. Minimally, what are we looking at? Well, potentially 40.47. And then the average is somewhere around 41.35. And then the max is somewhere around 4,300. Now, we got all of that. We figured all of that out from the size of the moon in the sky. And it's predictive, right? It's a predictive signal. We know in the future when the thing is coming, and we know generally what the effect of that signal will produce. If we study that signal over time, we even have the potential to estimate how far price will go before the end of the cycle. How many of you were taught in the early days of your trading that this was even a possible thing? I wasn't taught this. I was taught the same junk you were taught. Let's go through it. Ready? This is what I was taught. I was taught, hey, I need to sit at the feet of the guru quietly and gratefully for $500 to $1,000 a month forever. How many of you were told that when you first started trading and you tried to figure out how this whole thing worked? I was told that. I lost a lot of money at a lot of feet. There were a lot of guru feet in my past. Number two, you need to journal. Journaling is big for trading. Number three, you need fill in the blank. Volume, price, action. If you learn my secret price action setup, you'll have a 95% win rate, blah, 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 right? Somebody's trying to sell you an indicator. And there's all these things that we seem to go through, and nobody tells us about this stuff. Why is the market rallying? Why did the market fall? No one talks about these things. So when we come back into the world that I've developed, I have to go above and beyond to prove to you that this exists. Because I know the bar is high. The disbelief is tremendous. It's enormous. You shouldn't believe anything I tell you because honestly, no one in this industry tells the truth. It's laden with marketing professionals. Once they get your email and your phone number, how many of you have an email address that you just use for trading stuff? Raise your hands. Because the moment you put it in to that little form, you're bombarded with calls from college kids on commission. And you answer the phone and you hear 30 people in the background, papers rustling. You're like, oh God, what did I do? Right? I know what we're up against right now. So I show you these weird moon things as a way to just sort of break the ice and say, I get it, but check this out. It's complicated. There are patterns, though, in this data, in the historical movement. Solomon was right. Everything that has happened will happen again. There is nothing new under the sun. Gann himself said, if you study the past, you will be able to determine for yourself that history does repeat, and that by knowing the past, you can tell the future. There are patterns in the data that we can leverage, just like full moons and new moons, intraday in markets like gold and Apple, the NASDAQ, the S&P, SPY, Q, Tesla, AMD, doesn't matter. It's all predictive to an extent. So what we do every week, what I've done for the most part for the last 13, 14 years, over 600 webinars now, I think, is I make an offer. I extend an invitation. And I say, in essence, hey, I'm going to give you some times in the future. And let's look and see what happens at those times over 2 days worth of signals. And then on Thursday, let's get back together and kind of put my feet to the fire and see if what I told you might happen happened or not, right? In just the same way that I've sort of put it out there that this full moon, new moon thing is out there. I also put a link to this page out there. And those of you that are here, you don't own the software yet, you get these emails from me. I'll go ahead and put a copy of the link in your chat box. And we can come and see that we've put together the outputs of various markets together to see if we can in fact predict what will happen in the future. So on Tuesday night, Wednesday morning, right before the markets open, before Wednesday's market opens, I put this email out there into the universe. And I say, hey, let's see what happens. I've done this before on larger time frames over the years, over the last 13 years. If you're not a subscriber to our YouTube channel, please check us out. And you'll see that I've done this a lot. And there are videos like this one that says Corona 2008-2020 plan. I'm predicting the crashes years before they get here using longer term signals. I have a track record. If you want to go back and check it out, we're able to predict these things pretty accurately. But on an intraday level, sorry for going down that road with you here. On an intraday level, I output these times in advance from our flagship software, TachEon. And all of these blue lines are outputs from the software. And the software is telling us, hey, these are times lately where the price of, in this case, gold futures is being pushed up or down. And we should be aware on Wednesday and Thursday when these times come up for Wednesday and for Thursday, and maybe look for a trading opportunity. So all of the signals on the top of the chart, the blue signals, represent upcoming opportunities for sells, or times where selling is likely to occur on Thursday. And we've had this since Tuesday night, Wednesday morning. And then conversely, all of the signals, using the wrong letter, Mike, S, B. Hooked on phonics worked for me. All the times on the bottom of the chart represent times lately that the software has found buried in the historical data where somebody somewhere has been pushing the price of gold up lately. Now, the only times that we see signals are actual times lately where these moves are occurring. It's not black box. There's no magic Aladdin genie in my computer imagining things in the future. These are times lately that produce a radar ping. Pong! Pong! Like the old World War II movies. Pong! The only reason there's a signal at 10:20 is because someone has been cheating. Someone has been sticking their finger in the cookie jar on Thursdays in gold futures and pushing prices higher. Now that's all well and good, but if it doesn't work, if the signals don't work for Thursday and they don't work for Wednesday in gold or the S&P, then it's all for naught. So we have the signals here for gold futures, Ethereum, pound dollar, euro dollar, and we're able to compare exactly. We're able to compare what took place versus what actually happened. Everybody okay with that so far? If markets are predictive, if the very fabric and nature and markets are predictive, those big cycles that we saw related to things like the moon should present themselves in smaller fractal patterns intraday. We should be able to study the past records of any market and determine lately when those times are and project them forward into the future. That's the thesis. Okay. Now, I want to show you something real quick. This was the chart that was sent out for Wednesday. And I just want you to see the times before we go into the example. So on Wednesday, we were waiting for 505, 540, 730. So 505, 335, 540, and 730. So the times on my chart are the times that I sent everybody else before this market opened. Okay? So at this point, all we can do is look and see what happened at those times. Oh! So when we get here, there's a lot of full moony, new moony action going on. What do I mean by that? I mean, let's take a cursory look at what happened. We can see what happened at 240. We can see what happened at 335. We can see what happened at 540. And at 505, not so much. Not so bueno, right before the European Open. We can agree collectively that at 730, not so bueno either. But now check this out. 905, it shoots up. And the high of the US market before lunch, there's a double top, but the high is at 950. Then we have a signal at 1035, it's off by 1 bar. That low is right there. At 1120, it does not go down, it goes up. At 1210, it goes up. At 1230, it does hook down. At 130, it hooks up. And at 3:40 in the afternoon, gold hooks down. Remember, these signals were sent out before the market opened, in the same way that we know 100 years into the future when the moon will be full or empty. It's predictive. And so if we analyze these together, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 10 out of the 12 signals do what we're expecting it to do. So with a calculator, if we type 10 divided by 12, that's 83%. Is it okay if I say, or would anyone disagree if I said 60 to 70% of the time, what we were expecting happened? Is that okay for me to say? Well, let's flash forward into today's price action for gold, and we'll do the same thing. All right, here are the signals for the next day: Euro session, Asian session, US session. 110, we'll pick the obvious ones: 215, 405, 440, 520. Big one here, 640. Ready? 640 up to 930 at the open, goes straight down to the moving average. At 1020, it goes straight up. At 1115, it finishes lower. At 1225, no. At 110, no. At 135, yes. At 255, yes. And then right here, it's just like, ugh. Are we in the same ballpark? So Roger, what I'm doing here is I'm looking to see, we were expecting an up move. So between 110 and 215, it went up. Between 215 and 305, it went down. And at 305, it did not go up. It went straight down. By 406, we finished lower than we started. 440, we finished higher. 520, it went lower. 610, it went higher. 930, it went down. That's what I'm saying on a very cursory level. Would you agree that we're in that ballpark of 6 out of 10 or more? And as we go back in time, we can see that these signals are doing that over and over again. Here's the Asian session when most of you are watching TV and eating your dinner. This was Tuesday night, 4 a.m. Eastern, 1 o'clock Pacific, 9 o'clock London time, right? When the software is saying, hey, there's a selling pressure signal right here and the candle closes at 7:15. Roger, would you agree? It drops down. At 6:25, when there's a buying pressure signal, the candle closes and it shoots up. And then here at 9:30 in the morning on Tuesday, it doesn't go up forever, but the initial reaction is straight away. Well, how much money is straight away? From the open to there is $350. From the close to here is $160. From the close to here is $200. From the close to here is $410. From the close to here is $130. It seems like more often than not, if we're following the predictive signals, we're putting ourselves in a position where banks are pushing our orders towards profit. And we can go back and see over and over again, even in the sell-off days and the uptrend days, that same thing is happening. In this one example, Raj, if you sold at 8:30 and you exited by 9:20, that's a $1,400 move. That's not small potatoes. Potatoes. Any questions about the predictability of that market? Okay. This is a big one in the news lately. Taters. They call me tater salad. Lately in the news, it's all about oil, strategic reserves, Russia, OPEC, natural gas, Europe, pipelines, lions and tigers and bears. Oh my. And so on Wednesday morning, before the markets opened, I sent out the times for crude futures for Wednesday and for Thursday. We're going to talk a little bit now about applying rules to the raw signals, right? Because these are raw signals. They're just buying. This works as good anytime a market is open. Anytime a market is trading, Dave, the signals work just as good. The accuracy is the same. In fact, we had a customer do a test on the signals with trend for the S&P E-mini on a 3-minute chart. And for the Globex session, 24/7 signals, where are all the signals? There we go. Dave, can you see that equity curve? The model had a positive expectancy from the moment the market opened on Sunday night at 6 o'clock to the moment the market closed on 4:15 on Friday. Hey, Ollie, just email me. I'll send it to you for sure. So how do we reproduce that? When we analyzed our customers' successes and we said, what are you doing to make money with our program? About 60% of you answered and you said, I trade with the trend. And so when you trade with the trend, hey, Ollie, let me get you an address. When you trade with the trend, there's some statistics that emerge from that. And so the statistics that emerge from a trend trade, and this is whatever program you use, if you're a trend trader, your profitability is somewhere in the 45 to 55 percentile in terms of your expectancy. You're winning about 55% of the time. And your profit factor is anywhere between 1.5 and 2.0. You make $1, you lose 75 cents. You make $2, you lose $1. You make $1, you lose 75 cents. You make $1.50, you lose $1. So when you trade with the trend, you'll see here, this is over almost 1,000 executions. You'll see 1.5 and 0.54 or 54%. If you look during the Asian session, it goes to 1.8 and 56%. If you look at the London session, it drops to 1.3 and 53%. If you filter out Thursdays, it goes to 1.6 and 57%. So a trending model has a positive expectancy using the predictive signals. I cannot find your emails. What is the contact info of the sender? Hey, Jim, this is my email address. So what were the rules of that signal, the setup rather, as opposed to the signal? Well, the rules involve signals with trend. And there are two types of signals with trend that I teach in these webinars. I want to just review them real quick with you so we have a basis together to follow what happened at the signals. So a signal with trend is filtered in relation to an average. I know it's lagging. It's the one lagging indicator on there. It's a 120 period exponential moving average, comes standard with every trading platform. You'll find it in your NinjaTrader platform under EMA. It's set to a 120, 120. And what we're looking for are signals that line up with the trend. So if it's moving up and sloping upwards, we're looking for buying signals. If it's moving down and sloping downwards, we're looking for selling times. So in this example, let's just take a look real quick at the rules, and then we'll apply those rules to the markets we had access to. When we arrive at a buying pressure time, we enter at the close of the candle, big C. Our stop is 1.5 average true range values, 1.5 ATR values away from the low of the candle. That's what these white lines and blue lines represent, stops. So we're going to exit at the close of the opposite signal. So close is the entry, the stop is down here, and we're going to exit by the close of the next signal. And the premise is, if the trend is up, and this is when banks usually buy, we want to be buyers in that window of time, that predictive window of time. When we get to the 642 signal, we enter at the close of the candle. We put our stop 1.5 average true range values away from the low. We exit by the close of the opposite signal. Banks are going to buy maybe again, and we want to exit by the time they usually start selling. And then 712, close of the candle is our entry. Our stop is 1.5 ATR values away, and we exit by the close of the next signal. These are the signals with trend. Jim, to get on our list, you just have to go to our website and take our video demonstration, backtothefuturetrading.com. Once you register there and give permission to us to send you stuff, you'll be getting those emails too. Make sure you take us out of spam. 120 EMA. Yeah, and the moving average isn't really relevant. We use it because it works. But if you want to use one that you like your 50 or your 86 or your 200 or your 100, just be consistent. Okay, now, there's a variation of this called the crossover. If the signal is initially not a trend signal, it's on the wrong side of the tracks, and then Ollie, it closes above the moving average, it breaks the ice, and it finally closes above that EMA. Now it's a trend signal. It made it into the light. There's the sunshine on the other side of the moving average. Oh, I'm a trend trade. We put our stop one tick underneath the crossover candle, the candle that crossed over the moving average. And we enter in the close, and we exit by the opposite signal. That is a crossover variation of a trend entry, a signal with trend. Okay? Any questions about a crossover? The next one is weird. It's called a puncture. Think of it like a failure with trend. And here's how a puncture works. This one busts brains. People have the hardest time with punctures. If I have a selling pressure signal, in this case at 9:30, Ollie, that represents a time where somebody in a mahogany lined office somewhere gave the order to sell in the past. We don't want that if we're looking for trend entries. In this example, the trend is up. So Ollie, the thing that we're most afraid of are sellers pushing the market down into our buy orders, right? So when we get to 9:30, we have a signal that's essentially there saying, hey, it normally would start pushing down. Does that make sense, Dave? Normally at 9:30, we would expect the market to go this way at first. Well, as it starts to creep higher and higher towards the stop line, we begin to get less and less suspicious of selling activity. Think of it like an army of sellers, like in the movie Braveheart, when he goes to fight the British, he has an alliance with the clan of people that have horses. And Mel Gibson's over here, and he's got his big sword, and he's like, ah, and he's going to fight the British. And then he waves his sword, which is the signal for the clan to come and join the battle and fight the British. And how many of you remember that scene where the guys take their horses and they ride back home and they abandon him? I remember that scene from that movie back when Mel Gibson wasn't a racist and Kanye took his place. So when this candle is going higher and higher and higher, the sellers that usually show up here have abandoned the battlefield. How many inappropriate things can Michael say in 50 minutes? We're up to 3 so far. So the minute it crosses this stop line, I enter long as a failure with trend, a puncture. I put my stop 1 tick below the puncture candle, and I now exit at the close of the next signal. It is a failure with trend. The people who normally come and sell are nowhere to be found. And so that creates comfort for me. Hey, are the sellers here? No, it's like pretend you're a bank robber and you show up at the bank and all of the guards are on strike. Where are the guards? There's no guards here. This is a really good day to rob a bank. So when we show up at 9:30, there are no sellers. And we place an order long and we hold it for that window of time. This is called a puncture. So when we come and look at crude futures, come with me and you'll be in a world of pure imagination. Follow me, ready? 609 comes up and it closes above the moving average. The stop is just below the crossover candle. The entry is at the close of that candle. We enter at the crossover trade and exit at 718 for a $920 gain. It never punctures the blue line. No puncture trade. 739, we enter at the close of the candle. It never hits its stop, and we finish exactly where we started by 754. 0 ticks. At 754, we have a failure with trend, a puncture trade. The market was supposed to do this, consolidate and maybe start to go down, and Ollie, it doesn't. We walk into the bank and there are no guards to be found. We enter at the close, we put a buy stop right at the line or 1 tick above the line. And now we enter and we're in the direction of the trend. I exit by the next signal. Do you ever go short at 913 and hang on? 913, 918, you mean here? So let's address the elephant in the room. If traders ever went to AA, Alcoholics Anonymous, they would start out by saying, hi, my name is, and I'm a counter trend top and bottom picker. Yeah, Ollie, there's customers that use this with OFA for sure. So there's a danger with counter trend trading, right, Dave? That's how most of us started. And that's where a lot of us got in trouble. What I personally do is this. If I have a counter trend signal, and this happens a lot more often with force than it does with warp. And Dave, the signal is like this, and it's a selling pressure signal. And the stop for it is up here somewhere. Dave, I'll put my stop just above the high of the candle and try it. So I would enter and say right here, and my stop is right here, as small as I can make it. So if I followed your theory, I would have a 2-tick stop here and been stopped out. I would have a 2-tick stop here and been stopped out. And Dave, now at 9:18, my stop would have been just above this candle, and it would have got me in that move. You see what I mean? I'll risk very little to see if I can catch it, but I don't commit my kids' college funds to it. Then at 9 o'clock, we have our first official trend stop out. We enter at the close of the candle and we exit and we lose. 9:18, we have a crossover signal with trend. We enter here, we exit in a negative position, right? This is the world. This is how it works. 9:57, we enter and we have a stop out right here. And then 10:27 comes along. Oh! And we get it all back. Right? Then we enter at 11:42 and we exit at 12:03. We have a puncture at 12:57 and it hits its stop. We enter at 1:21 and we exit at 2:33. Oh! We enter at 3:21. We exit at 4:03. So when we do these things, right? Losers on the bottom, winners on the top. Let me add it up for you here real quick with the calculator. Clear. Let's see, 32 plus 55 plus 170 plus 1 plus 58 plus 8, carry the 1 minus 21 minus 64 minus 43 minus 51. So at the end of the day, there's a hypothetical 205 ticks on the board times $10 a tick is $2,500 net profit, theoretically, following those simple signals. Here's my problem. Predictive signals don't work. That's what I've been told in every forum and every review that was fake online, every knucklehead trader that loves to sit in front of his keyboard like a warrior, protected by anonymity. It doesn't work. There's no way it can work. But we just sat here together and it worked. The same way this stuff was predictive and worked, right? We could come here and overlay those same things, right? Enter at the close of the candle, exit at the close of the candle. Enter at the close of the candle, exit at the close of the candle. Enter at the close of the candle, exit at the close of the candle, and we have a stop out. And we can come here real quick. And we can do the same thing. There's our puncture, exit by here, come here and exit, stop out, and now we're up a little bit, right? We can do the same things crossovers, stop out, and still come out net positive using the moon as a predictive signal. We can apply the same techniques to oil over and over and over again. Any questions about this? Could we have done the same thing today in the E-mini NASDAQ? Raja, if we look at the 1 minute NASDAQ. Ali, if you got to the webinar late, you're probably going to want to go back and watch that part. Cool beans. So Ali, can you see the advantage now of taking the signals that I gave everybody before the market opened Wednesday, and we get to Thursday, and I enter now with the close of the candle on 126, and I exit when we get to 147 using a signal with trend. And that is a $46,800, $900 plus move. And if I enter on the close of 1258 and I exit by 108, that's a $60 move. And then right here, when the candle Ollie closes below the moving average, and I put my stop one tick above the crossover candle, I'm going to exit when? By the 209 signal. What I want you guys to think about is how the hell did we know it was going to go up at 126, down at 108, down at 147, up at 209, down at 227, up at 226. It went down at 233, and it did not go up at 258. It finished where it started by 309, and then it went up at 320. And then it went down at 345. And to just really, really, really drive it home, the times were published before the market opened. Again, just so there's total transparency, here's Thursday. You can scroll down and we can find those times, click them open, and there's the NASDAQ 1 minute chart. How could we know, Raja, 2 days later, that 147 would be the high, 209 would be the bottom, 227 would be the pullback? Unless everything we were told by the marketing guys and the gurus was absolute hokum and BS, right? This is one of my favorite slides. I've used this slide for 7 years. You are playing a game that no one plays fairly. Everyone cheats. JP Morgan pays $1 in fines for every $3 that they earn. Think about that. Market manipulation, trading violations, spoofing in forex and precious metals and indices, they get away with murder. So when you say, hey, I use order flow analysis, I have news for you. They can hide their orders. They have orders on the chart that aren't real. And when your indicator says, oh, 1,000 contracts, there's not 1,000 contracts. They're lying. It's not real. And when you're trading with volume, it's not real. There was a law that said they could break up their big orders into little tiny blocks because people were paying attention when the big block orders were coming through, and that disappeared. They will always have the edge. However, when it comes to time, we level the playing field. There's no edge anymore for them when it comes to time, because they're predictive. Everyone in this room is predictable. There are scientists who can predict where you will be a year from now exactly based on your cell phone history and your location. Did you know that? That'll weird you out. And so our belief is if the game is rigged and the only people who are making money are the riggers and the cheaters and the Tony Sopranos of the market, the guys who seem to screw the market up for us, the Jerome Powells and the Jamie Dimons and the Warren Buffetts who make shady buying deals in the 2008 recession with Goldman Sachs stock, and everyone goes, oh, that was fishy. You'll never have an invitation to that country club. They're never going to tell us what the real game is. So we're going to use their times against them. That's why we have a 4.9 rating out of 5. Because people come back to the table, they crack their knuckles and say, go ahead, try to pull a fast one on me now. Right? And so when we scroll down and we look at what these knuckleheads are doing, let me see if I can find it. This is my third favorite chart. This is the golden rule. Tomorrow when you wake up without our software and you try to trade the way you've always been trading, you will get the result you've always had because every deck in the world is stacked against you. You are predictable. You are more predictable than they are without our tool. And so they lure you into stop runs. They lure you into moving your stops. They lure you into cutting your profits short because you are blind. You have no idea what's coming next. You resort to reptilian fight or flight responses that are locked in stone. Your nervous system is predictable. Of course you're going to move your stop. Of course you're not going to let your profits run. You're human. With our tool, you're superhuman. And they're on the run. Any questions? Don't be this guy. Stop being that guy. Don't be that guy who has to explain to his wife where the Disney vacation money went or where grandma's inheritance fund is. Stop. Stop being the guy that has to explain to little Billy he's got to go to community college this year or where all the Bitcoin money went. Stop being predictable. Be the predictor, right? Be like the rest of our customers. When Goldman Sachs moves, they move. When they sell, they sell. When they buy, they buy. Most of the time. Make more than you lose. Make more than you lose over time. It's an edge. Ultimately, this is an edge. This is not a magical cure-all. This is what we were told we should have. A statistically relevant edge, right? Where's that slide? There it is. If trading were a religion, this would be our Bible. It would be the gospel according to Mark Douglas. Trading is a random numbers game. We need an edge to exploit over time. This edge has been working for over 13 years, 3,500 customers, every major financial market in the world, stocks, options, futures, forex, equities, commodities, wheat, soybeans, corn, crude oil, home heating oil, silver, palladium, gold, Dogecoin, Bitcoin, Ethereum. It's all the same game. We can do the same thing, produce the same results with the same setups, and we have. Our customers have over the last 13 years. Any questions? At the end of every webinar, we come back together and we ask the question, were we able to send the times 2 days out in advance? Were we able to see the results 2 days later and conclude that this thing happened? The answer is yes. The answer is yes. At its most basic levels, yes. Any questions about that? What do you think? What do you think? Okay. You guys up for one more lesson, or have I exhausted your brains? One more short lesson before we go? Okay. 5 minutes, I promise. This won't hurt too long. When you start to study time, a lot of you will send me emails and say, Michael, I followed your signals, but I have a weird problem. Some of your times went in the exact opposite direction. How many of you had that experience? Dave, it's the same for forex. It's the same for any market. Doesn't matter. Yeah. Well, inside of your handouts section is a guidebook that I wrote 6 years ago. And the longer you study time, the more fluent you become in its language. And one of the things we noticed was that, hey, sometimes the selling signals and the buying signals, the normal signals, they do what's expected most of the time. But then we started to notice patterns. For example, about 6 years ago, we started to notice when you arrive at a selling time, and Leon, that signal or the candle to the left or right, one of those three candles, the low is lower than the prior swing low. When you arrive at a selling pressure signal, and either the candle to the left, the candle of, or the candle to the right of the signal candle is a lower low, a funny thing starts to happen over and over and over again. It reverses most of the time and goes in the opposite direction. And we didn't have fancy Japanese candle names for these things. We just started numbering them as we learned them. And so when we get to a selling pressure signal, Luke, and it was a brand new low in relation to the prior swing, we'd put an arrow under it pointing in the opposite direction. The same thing was happening to the upper signals. We would arrive at a buying pressure time, a white dot in your charts, and when either it or the candle to the left or the right were a brand new high in relation to the prior swing, we would put a red arrow, in this case a white arrow, a blue arrow, over the candles that were new highs. And Luke, when that happened, when we assigned a mechanical definition to it, it would reverse and go the other way. So I want you to check this out. Can everybody see yesterday's E-mini S&P on my screen behind this? At 11:05, we're expecting a buying pressure signal. Luke, it can be, but not always, no. And can everybody see here where the prior swing is and how it matches our mechanical definition? So Luke, yesterday at 11:05, we arrive at the higher high. And this is a diagram from 6 years ago, NQ0616. And then when we arrive 6 years later, can everybody see what happens after that signal? How it drops down? Now, Luke, check it out. There's the prior swing low. And we arrive at the selling pressure signal at 11:35. And that signal right here is the lowest low, which is what? A pattern 4. And it does what pattern 4s do. It reverses and goes in the opposite direction. There are advanced patterns inside of your timing vocabulary, and the software will automatically plot these advanced patterns for you. So, for example, when Ali asked, is there anything you can do to improve it? Ali, we already improved it. I'm showing you the improvement after the basic stuff. The basic stuff is Jesus turning water into wine miracle stuff. The advanced stuff is Jesus turning around and walking on the wine he just made. And that's this. So here, there's the prior swing high. Ali, it violates the prior swing high. It assigns a pattern 5 right here. The dot is drawn on the opposite side. Instead of the blue dot, the white dot here, there's a blue dot up top. Now I can short it and get out at 720. At 720, we violate the prior swing low, and I get a pattern 4 on the third candle. That's the bottom of the market. There's a pattern 4 here, there's a pattern 5 here, and there's a pattern 4 here. So if you look at the 3 biggest moves in the US Open yesterday, the software told us to look for the market to go up at 850. It told us to look for the market to go up at 1010. And then Ali, it told us to look for the market to go down at 1105 and then go up at 1135 and then go up at 1225. So I've improved it. The longer you look at the timing signals, a language begins to emerge. We begin to intercept the codified communications of the banks. We understand what their codes mean. We're fluent in the language. In over 13 years, we've identified, I think, most of the patterns. So I want you to, if you can, download that histogram book and study those patterns. The software draws them for you automatically when you turn it on. If you've owned your software already, you've already purchased it, you can activate those patterns by unclicking this box where it says show signal dots only. Just uncheck it and those patterns will appear. Wait about 2 weeks before you turn that on. Your brain will probably explode if you turn it all on right away. But I want you to know that we've already made those improvements, Ollie. There's some pretty cool advanced stuff too. The software will tell you when the signal is likely to go in the exact opposite direction. And so you can be involved here, you can be involved here, you can be involved here, and you can be involved here and here. And these were all times that we gave to you before the market ever opened. So, little extra added bonus there to help you sort and sift through what they're likely to do at those times. Yeah, it's pretty cool stuff. History merely repeats itself. It has all been done before. Nothing under the sun is truly new. Now, if you study the time periods and the time cycles, you will learn for yourself why markets move at certain times. This is a guy 150 years ago There it is. William Delbert Gann. By a study of the time periods, you will learn why tops and bottoms are found at certain times. Time is the most important factor in determining market movements. And by studying the past history of the markets you trade, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. If you're referencing these advanced patterns, we've already proven what he said over 150 years ago. If you're referencing the forecasts in their raw form and we see what happened at those times, we proved what he said. If we're referencing the signals and keeping track of the entries and the exits in volatile markets like the NASDAQ E-mini, it's still working over a century later. And we can tie it to things like the moon in the sky, right? And we can see over a broad period of time, it's been happening for years and years and years. And no one on television is going to mention it to you. No one's going to say, hey, good morning, everybody. It's a full moon day. Get ready to buy, because it sounds silly. I would rather sound silly and warn you about this so that when these predictive moves happen, you can get in and get out, and 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 laugh all the way at the people who didn't believe that this was possible. It's been happening for years and years and years. And the further back you go, the more you will see that predictive times are the key that you've been waiting for to unlock your potential. Now, how do you get it? Good news, it's on sale for the lowest price of the year right now, because that's what you're supposed to do. You're supposed to say, Black Friday, Cyber Wednesday, we're crazy, it's insane. The program that we're talking about is called TachEon Warp. It's our flagship product. This is the flagship product. This is the one everybody starts with right here. This is the one everybody gives us the great reviews for right there. If you click on that link, and I'm going to go ahead and paste the link in your GoToWebinar chat box. This is the traditional clicking of the link. At the very bottom of the Warp page is a gorgeous orange button. And when you click on it, you'll get an annoying pop-up. We have a live trading room that meets Tuesday, Wednesday, Thursday every week from 8 to 12 hours a week, 48 hours a month. If you are the kind of customer who likes to have your hand held and shown the entries and the exits, this is where I'm going to get in, this is where I'm going to get out, and kind of do a earn as you learn thing, then a room like that is good for you. And it's on sale when you sign up for 25% off. It's $150 a month. You can cancel after your first month. If that's the kind of learner you are, you should get it. If you're not and you're super smart, like most of you purport to be, you don't want your hand held, you're going to trudge and go it alone, then go ahead and just ignore that. Stand by 1 second. Click on the button, go to the room without it if you don't want it. There's the purchase agreement. When you purchase, we commit to you. We release a treasure trove of documents and training videos and personalized training and installation. We're locked in. We're married together. Please make sure your computer is up to par. Please make sure you're not a commercial hedge fund. We're going to find out and turn your license off. Don't try to steal our code and sell it to Some dude in Nigeria will find out and turn your license off. Please don't call us names, type in capital letters with exclamation points and swear at us. It will affect our working relationship. I am on your side. There are 5 of us here at the company. We are here and committed to your success. 3 of the people on staff are actual customers that loved it so much they want to help other people out. There is a promo code. It is, I think, WARP 750. WARP 750, capital letters. WARP 750. When you hit apply, it will take $750 off. WARP 750. That's our end of year sale. This includes 2 computer licenses, lifetime updates, no additional costs or charges, free white glove installation, video training archives with over 10 years of classes, and our undying American gratitude. We're a small American company. We like to stay small so we can personally help people. We don't do a lot of marketing. We don't do a lot of Google pay-per-clicky stuff. We let the results speak for themselves, and most of you were referred to us by another person. We prefer that market if that's an option for us. We love word of mouth. So lowest price of the year, Warp 750, expires on December 31st at midnight, and then it goes back up to $24.95. So take advantage of that if you can. And if you get an email from a guy named Dave, he does work with us. He's got shifty eyes, but a good heart. This will work on equities, options, daily and weekly time frames down to minute and second charts. This works on tick charts, range bars, Renko bars, and volume bars as well. So you have no excuse. Now is the time to know when the moves are coming in the future. Many of you are on your last leg and you're thinking, I got to make it work. I don't believe in coincidences, and everyone who has found us right on time. So don't miss the opportunity that the universe or God or whichever you believe has brought you here today. You're here for a reason. I believe that. And so I hope you take advantage of it. Woo! The market you trade is not random. For the last 13 years, we've been helping traders all over the world. And thank you for your support. If you're a customer, you've enabled us to reach thousands of people that were on their last legs and ready to give up, only to turn it all around, come back and take their money back plus more. So you've had a part in this, and I want you to feel good about that too. As we move forward into tumultuous, uncertain times, this is my wish for you. May the wind be at your back. May the sun shine upon your beautiful, handsome faces. May the valleys of adversity rise up to meet you, and may the mountains lay low before you on your way. I wish you peace, health, prosperity, and joy. All the time on earth you need to enjoy the wonderful things that are here. Don't waste a second on anything that detracts from your dreams and your goals. We get one go around on the big blue marble, and I hope you make the most of it. I would love to be a part of your journey. We want to be a part of your team and bring you into our small family here too. And if that's what you're looking for, welcome home. Have a great night, everybody. I will see you guys later. Yes, Ollie, for example. Have a wonderful evening. Take care, and welcome on board to our new customers. Thanks, everyone.